Good evening, everyone. Welcome to Banao Bharat's Trading for Living Monday live session, 13th of November. After a good start to the Samvat yesterday in the Muhurat trading session, wherein we saw Nifty closing at around 100 points higher, today was kind of a anticlimax with Nifty losing about 80 points for the day, which means the large part of the gain that we saw as a Muhurat trading day's gains have already been lost. Bank Nifty slightly was holding up. Bank Nifty was not down much. Bank Nifty closed just about 40 to 50 points lower. The action very clearly is not in both Nifty and Bank Nifty, which means whatever is happening in the market is not actually reflecting enough through the indexes. There is a lot more action happening outside of the index which are not getting noticed or which are not getting reflected in the benchmark indices. But having said that, market participants are very much active in non-index based counters, and especially the rally that started in some of the PSUs have extended their rally even today, which means the continuation of the up move in some of the counters like Coal India, PFC, REC, NMDC, NTPC, all of these counters will continue to blast in the coming days and especially in this week, until unless there are major negative surprises to spoil the party in the PSU rally. Having said that, on the global front, continuous negative news and negative data is coming in, which is not getting priced in. As of now, any of the negative news is not getting priced in, which means completely markets are not ignoring the negatives and not making new highs, but at the same time they are not reacting also adversely to the negative news, which means market considers this as a significant negative data, but it's still not ready to react immediately on the downside. But eventually, the way the data is getting formed, I have a feeling we are headed down globally, especially the US markets. We have over the weekend we saw the rating agencies downgrading, especially Moody's downgrading US to negative. It is a significant development. US fiscal deficit is a matter of concern. US external debts is a matter of concern. So for many decades now, US has been borrowing from abroad, or it has been selling bonds to the developing countries, giving it a very sovereign outlook, the dollar bonds. But the governments, though the US economy has grown, the US as a fiscal economy, when you say fiscal economy, it means the government's balance sheets have not improved, mainly because governments have allowed for businesses to flourish at the cost of government, which means businesses are making profits, businesses are growing, businesses are expanding, there is overall GDP growth happening, but that is not bringing in enough revenues to the government for it to work on its other activities, because of which the taxation on the business entities are less, because of which, like they have been forced to print money or borrow from external countries or foreign countries, which definitely the US government and the citizens of United States will have to bear the brunt sometime or the later. In the US, in spite of good employment growth, in spite of good business growth, governments haven't been charging the taxes enough, but governments have been spending. So where is the spending coming from? It is just expanding the fiscal balance sheet by borrowing, one, and two, by printing excessively. So they are even inflated the financial assets. All of those things will culminate in some kind of a negative development in the coming years, and we need to be on high alert with respect to the financial instruments, especially the liquid instruments, which are prone to quick unsettling of the prices. So the things are not looking very well. The first trailer in the Indian markets we have seen by Nifty falling from 20,200 levels to 18,800 levels, and now for last about 10 to 12 days we are seeing the pullback mode going on, and in this pullback we have come up to 19,500 levels. Yesterday in the Muhurat trading we saw Nifty for a short while closing around 19,000 or trading around 19,500 levels. Today it has come below 19,500 and then closed below 19,500. So in spite of some of the big movement or big momentum still pending in some of the stocks, especially the PSU stocks and some of the mid cap and small cap stocks, the larger indices are not reflecting the up move one happening in these side counters, and secondly the large indices or the large caps and the frontline indices are now waiting for its next leg of down move. So my overall take for this week and for the coming days is markets more or less the pullback is complete. Because the pullback is now complete, today it has failed to close on the positive side, which means the pullback that we saw from 18,800 levels to 19,500 levels, I would conclude this pullback is now over. What is now left is resumption of the down move. So how will all of these PSU stocks fare from here on? My take is these side counters, these small and mid cap counters which are in multi-year breakouts, they will continue to do well. Even if market falls slowly or little bit, these counters will continue to slightly show the positive momentum. One good example is Suzlon. On a negative day in Nifty, you can see Suzlon not falling much, but on a good day in Nifty, Suzlon just leaps more than 3 to 4%. 5% is the circuit limit for Suzlon. So that kind of a pattern we can experience in all of these counters which are not part of the main indices, but large caps may continue to feel the headwinds, and in spite of lot of negative news boldly coming out. In fact, all this while credit rating agencies were hesitant to give any kind of negative ratings to a country like US, but now one bold step by Moody's has been initiated by re-rating the country to negative, which is a significant development, the effect of which may not be immediately seen. People may not be able to accept it so easily and pull the markets entirely down, or they may not crash it because of this one particular news, but it will set the ball rolling to the downside, and this is just the beginning of the fall once again, even in the global markets. So that is my take for today's session, Monday. Markets have completed the pullbacks, and now the downward journey might resume, but it may not impact some of the momentum counters in mid cap, small cap, and other PSUs stocks. So that is with respect to our Indian market, and globally also I think US market from this day onwards, it may not, I have not seen the chart in Dow Jones or Nasdaq. I don't know how much of pullback has happened in those charts, but today if Dow Jones and Nasdaq, if they close negatively, then there is all the reason to believe even the pullbacks are over in the US markets. Once the pullback is over, they are in no way looking like, once again they will cross the pullback levels. So that's it from my side for today. Main takeaway, markets will resume the downward journey moving forward. If they don't, then you need to position yourself accordingly. No matter what people say on the media or social media, you try to have your own methodology and see if our thought process is confirming the thought process which you already have. If it is confirming, then you can go ahead with your decisions. If it is not confirming, then better stay with your judgments, because ultimately it is you who will be putting the money on the table. Having said that, if you want to learn the mechanics of the trading, then explore our Trading for Living mentorship program. And if you have any queries on any of the stocks, we will be glad to help you with whatever technical analysis that we can do on those charts. So have a profitable trading day, trading week, trading month, and trading Samvat. We have begun the Samvat 2080, and hopefully no matter where the index goes, no matter what the stocks do, what matters is your balance sheet, your P&L. See that you do not get into big losses in the coming Samvat, and hopefully you all end up the Samvat with good returns. Let us all once again meet tomorrow. Until then, Om Swasti.